Fantastic. So I wanted to introduce Bert Dohmen of Dohmen Strategies. He publishes a newsletter. He's a longtime macroeconomist. Bert, can you give us some background? Talk to us about what you do and how people can find out more information about you, et cetera.
Yes. Yeah, I started the firm in January 1977, and it's an economic and investment research firm. And what prompted me to start the company was in 1977, January, Investors Intelligence, which surveys investment advisors, at the lowest number of bears ever in history, 3.4%. And I said, they're all going to be wrong. I want to have it in writing that we got it right. We're going to go into a bear market. And the bear market started the next month. And the Wall Street Journal, so I started the Wellington letter in January 1977. We sent it to the media. The Wall Street Journal picked it up, and they wrote the entire Heard on the Street column of the Wall Street Journal with what we said about the bear market starting and all the reasons why. I use advanced technical analysis for timing the markets. And of course, Wall Street tells you it's not possible to time the markets. No one can do it, but yes, you can. And it's not rocket science. So that put us on the map. And then the economic forecast, when Arthur Burns left the Federal Reserve, they got G. William Miller as the new Fed chair. And he said right away, because inflation was rising strongly, he said, we're not going to fight inflation with tight money, but we're going to do it with interest rate policy. And that meant higher interest rates. Well, even now, most economists don't realize that higher interest rates, when you boost interest rates, but you don't tighten money, it boosts inflation. So that's what we're seeing now. That's why inflation is far from being conquered. And it's amazing that they don't teach this in college yet. I took 2 years of economics, although I was a chemistry major and got my degree in chemistry and physics. But I wanted to see why our economists are always so wrong. So I took 2 years of economics and I found out why. They use false theories from A to Z. So higher interest rates without tight money boost inflation. And that's what our success is on. I developed the Dohmen strategy of a theory of liquidity and credit. Liquidity and credit are the two major determinants of the stock market trend. Nobody talks about that on TV. Nobody. And that's all that you have to know is liquidity and credit. Are they expanding, which means the market is going to go up? Or are they contracting, which means the stock market is going to go down? Has nothing to do with the earnings. Now, I know that's heresy to say that earnings have nothing to do with the stock market, but really, why does one time the S&P sell at 25 times earnings, and another time it sells at single digits? We have that happen. Why is that? If earnings are so important, that shouldn't happen. Okay, so theory of liquidity and credit is so important. No one talks about it. We do in our Wellington letter. So we have the Wellington letter, which is twice a month, so total of about 50 pages a month of thorough analysis. And that is the key. You want to analyze the markets the way nobody else does. For example, all the fake numbers on the economy over the last several years. Oh, the job market is very strong, the economy is robust, and so on. So we debunk all this. We go to the website of the originators of this false information, which is the Bureau of Labor Statistics, BLS. And we say that it really should stand for Bureau of Lang Statistics, because with their seasonal adjustments, they give you all the wrong numbers. For example, in December 2023, they reported 517,000 jobs created in January. So that was reported in February. 517 new jobs created. We said that's impossible. January jobs always go down because of seasonal employments. So we went to the BLS website, and you have to look for it kind of hard. It took about 20 minutes, but economists don't take that time. And the real number was 2.5 million jobs were lost from the BLS own website. They factored that out with seasonal adjustments. And since day one, 1977, I looked at seasonally unadjusted money supply numbers. At that time, everyone was watching the Federal Reserve, and money supply, is it growing, is it declining, But they looked at seasonally adjusted numbers, and the same game was being played by the Fed. They give you totally wrong numbers through their seasonal adjustments. And in 1980, after Paul Volcker had initially tightened money, really tightened credit, then he got scared because the economy was just shrinking so fast, and they loosened money again. But the seasonally adjusted numbers didn't reflect growing money supply. So we looked at the unadjusted money supply, M2, and wow, it started growing in the summer of 1980 like crazy. So we had forecasted a 20% prime rate in 1990, I'm sorry, in 1979, and the Wall Street top economist, Gary Wenglowski, called it absurd, but it happened. We got a 20% prime rate in early 1980. Then it went down to 12.75% in the summer. And we said, wow, when we saw these money supply numbers, the unadjusted, is that by the end of the year, we're going to have a new high in the prime rate, above 20%. And actually on December 10th, 1980, we got 21.5% prime rate. So this is how you can be ahead of the crowd, just by knowing where to look and what is important. And you forget all this stuff. Now, the main debate in the media seems to be, is the Fed going to cut? It doesn't make any difference. What's a 0.5% or 1/4% cut going to do? No, you have to look at what is money supply doing? What are bank loans doing? This is how you know if there's fuel in the economy to make it grow, or is it contracting? And now we have a definite point of view where the economy is going to go. And so these are the important things. Whenever our view becomes suddenly the popular view, we know that something is changing, and we're probably going to have to change our forecast. You never want to be in the majority. The majority of people in the world are poor. Okay, so it's just that simple.
So Bert, thank you for your succinct explanation. So where do you see things right now, and where are the opportunities? And I mean, a lot of people are saying, commodities are the places to go. There's some big global macroeconomic changes. Can you give some perspective to us?
Yeah, I know some people like to have, something that's written in code, like next 10 years. What's going to happen in the market in the next 10 years?
Well, no, I'm interested in the next 6 months.
Okay. Well, next 6 months, because it's an election year, it's tough. It's an election year, and this is probably the most important election in my lifetime. So we don't know what's going to happen. Everything is manipulated now. Look at what happened here. What was it, just a few days ago? The manipulation of stock quotes. Suddenly, Chipotle had a bid and ask price of $1,000 bid and a $3,000 ask. You had Berkshire Hathaway. The bid was zero. So it went from 2,000 something to zero in about a fraction of a second. So they call it computer glitches. Are they really glitches, or is this a favor to the HFT industry? So because a week ago we had computer glitches. Suddenly in the morning I turned on TV and my computer, and I saw the Dow was down 600 points. Well, it was a computer glitch. It was not. But imagine you're a private trader or investor and so on. You see that right away, you want to hit the sell button. So markets are so manipulated. The HFT industry, high frequency trading, is now over 80% of the daily volume on the exchange. So, and they always talk on TV, yeah, investors didn't like this and this happening. The investors are concerned. The average investor has no role in the markets at this point. He's sidelined.
No, that's very interesting. But so again, so you're an investor, you have some cash or capital that you want to invest. Where do you see the opportunities? And do you only look at public markets, or do you do anything in the private markets as well?
No, we want to look at we liked the private equity funds for some time because they were kind of immune from this daily manipulations. But right now I think they're going to have a tough time next year for the economic environment that we see. Now, nobody can forecast what it's going to be because we don't know who's going to be in charge in Washington next year. We don't know who's going to be the head of the Federal Reserve. So anyone that says they can forecast the next several years in the stock market is a liar. You cannot, because if you tell me who's going to be the head of the Fed and who's going to be the president of the United States next year, then we can get closer to making a forecast. But right now, these are the biggest unknowns. And if you haven't noticed, the Federal Reserve does create the money, and plenty of it. So they have to facilitate the financing of this record-breaking U.S. debt. Okay, the U.S. Treasury has to sell its confetti, and it has to get buyers. And what the buyers don't buy, the Federal Reserve has to buy with freshly created money. We used to say printed money, but they don't use printing presses anymore. Now it's cyber money, it's just with a computer keyboard. Okay, so that's how they create the money. And it's the Federal Reserve's job to buy up what the private investors will not buy. So there's an infinite supply. Now, the Federal Reserve can make it clear by reducing reserves that it's not willing to do that. They can do reverse repos and all this stuff. But in the end, you have to know what the policy is going to be. Is somebody going to have the courage to say, we have to stop these humongous deficits in the government, And
So Bert, I mean, I'm kind of of the opinion, so it's a very binary matrix, right? That you either have Biden and it's more of the same plus some, or it's going to be Trump, and then USA will probably go in some mercantilist direction, right? Now,
regardless of Trump or not, I say we should consider having a law that no politician can be a president of the country, because the politicians have no idea. So I think a businessman has a much better idea. That's why under Trump, he did all the right things. I couldn't believe it. And because, I was not especially a fan of him, but I was not contrary to him either. But I guess my impression was just from the TV show he had. I was like, oh, he's really arrogant. But it didn't matter. He knew what to do about the economy. You cut regulations by 50%. That's what he did, and you cut taxes by a huge amount. And if you want the economy to flourish, you have to cut taxes. If you want the economy to die, you raise taxes. That's it. And the Biden now, or Brandon, whatever they call him, he wants to have substantial tax increases. So that tells me if he wins the election, you want to consider short selling, and bet on the downside, and probably sell what you can if you are not allowed to sell short. So the election is going to be very important.
Well, I mean, I guess that if President Biden gets reelected, that you're going to have, as you said, an increase in taxes and more migration towards, renewable energy and things along those lines. And if Trump is elected, you have a much cheaper energy, right?
Yeah, he's a businessman. He's going to look at what is necessary to get the economy out of the current situation. All the numbers, the economic numbers you see right now are false. Okay, if you don't subscribe to that, look at the private numbers, the Purchasing Managers Index. These are interviews of purchasing managers. Washington does not issue those numbers, so they are not falsified. They've been down for 18 consecutive months now. So we're actually in a recession, but nobody seems to realize it, but on TV they always talk about, oh, the economy is robust and the jobs numbers are terrific. Yeah, the jobs numbers are totally false. The last job number was, what was it, 303,000 people, jobs added? Well, they were all part-timers, and most of the part-timers were illegal immigrants. I can't believe that illegal immigrants are now part of our job numbers. Can you?
It depends on who's mowing my lawn, but, so. I think.
Well, I'm old. To me, illegal is illegal,
Our
you know?
our head of household jobs is very relevant to me versus the many part-time jobs that are out there, right? So any thoughts on the global situation from a political point of view? I mean, so maybe I can put something out there, a comparison that we've made several times, which is that 20 years ago, the West, the industrialized West, was about 2.5 times the size of what they call the global South today, which are, Russia, China, South Africa, et cetera, right? Whereas today, it's about 1.5 times economically the size. So it's shrunk dramatically relative, so I, coming from an engineering background, I like to look at things in terms of what's in a black box. And one black box has gotten smaller and the other black box has gotten bigger, regardless of what the activity is going on inside. So, do you have any thoughts in terms of, direction and things like that, and productivity and being able to produce things?
Well, I think the one country that is important for our economy, I mean, smaller economies, it's they don't have any influence on us. But China is the big one. It used to be called for about 20 or 30 years, they said China is the locomotive for the world economies. Okay, we don't hear it anymore because that locomotive now stopped and it's going backwards. So the locomotive you could forget. Okay, so now it's going to be, can China save itself economically? Okay, so that's the key.
Can you give us some insight into why you say that? Why do you say China's having problems?
Well, when a government tells the media and economists and so on, don't report anything negative about the economy, or you will be put in jail. To me, that sounds like they're getting desperate. Okay, so now if you trust the Chinese economic numbers coming from the government, then you should probably seek a different profession. But I don't trust any of the numbers, and Washington has been very good at adopting the same methods that the Chinese government uses for economics. That's really a shame.
So you, like, for example, for the United States, you used the purchasing managers index, with 18 months decline, and obviously there's probably other kinds of alternative data out there to kind of back what you're saying. I mean, even unemployment numbers by 1970s metrics are different from what the published unemployment numbers are today, right? But in China, like, any alternative data that might be out there that we can look at that would give us some perspective on whether or not it's doing better or worse?
Well, the only data coming out of China comes from the government. So you're really limited. So the next best thing is to see what money flows through. Money is flowing out of China and has been for the last year like crazy. And we're talking about several $1 trillion. So when big foreign money is flowing out, it's not because business is so great over there, okay? And now some of the money is coming back to the US, some of the money is going to India. Also, Vietnam is a good place for some of the corporate executives